Welcome to the deep dive. Today, we're really digging into a role that's become incredibly complex and demanding in any modern company. That's the chief financial officer.
Absolutely. The CFO today isn't just, keeping score. They're juggling being the financial architect, the crisis manager, and increasingly a key strategic partner right alongside the CEO.
It's a huge balancing act. To understand it better, we're looking at some fresh data today.
We are. We've pulled together insights from a recent CFO Pulse survey. This was done, I believe, March, April 2024, polling 126 finance leaders globally. And the data is weighted by contribution to global GDP, so it gives us a pretty solid picture of, well, how these leaders are feeling about things like risk, strategy, and technology.
Right. So our goal here, our mission for this deep dive, is to get a handle on how these CFOs are managing that constant tension. Dealing with the immediate fires, the quarterly results, the operational stuff, while also trying to lead long-term change. So the big question is, how are they actually finding the space to think about the future? And where do things really stand with generative AI in finance? Is it hype or happening?
That's the core of it. Let's start with that first piece, the shift in focus.
Okay, let's unpack that because, in previous years, especially when things felt volatile, it seemed like finance leaders were just consumed by the short-term operational fires, basically.
That was definitely the trend. But this 2024 survey shows, well, a pretty dramatic shift, maybe even fundamental one. It looks like they're really lifting their heads up and looking further out.
How dramatic are we talking?
Well, look at the numbers on top priorities. Between the 2023 survey and this 2024 one, strategic planning, it jumped from 38% saying it was a top priority last year to 60% this year.
60%? Wow. Okay, that's not just a small tick upwards.
No, it's significant. It means a clear majority now sees strategy as, like, their main job.
So is this them pushing for that seat at the strategy table, or is it pressure from, say, the board wanting more foresight?
I think it's probably a bit of both. They need to position themselves to manage capital and risk strategically, which, yes, the board definitely wants. And the data supports this beyond just the headline strategy number. Things like long-term resource allocation and planning that also shot up, from 30% seeing it as a top priority to 55% now.
Okay, so they're really thinking about where the money should go in the next, say, 3 to 5 years, not just reconciling last month's spending.
Exactly. It's moving beyond just fiduciary duty and reporting into integrated capital decisions and real strategic risk management. It's a different level.
Right, a higher order function. So if they're focused more on the long game, what's their take on the immediate future, the business environment right now?
Well, that's where it gets interesting. The consensus seems to be caution, maybe even expecting things to be a bit flat.
Flat. Not predicting growth, not predicting decline, just holding steady.
Yeah, more CFOs expect their industry's growth rate will just stay the same over the next year. And critically, they're twice as likely now compared to past surveys to expect investment levels will also just hold steady.
Huh. That's a real change, because for a while there, the expectation was always, we need to invest more, spend more. Now it sounds like, let's just wait and see.
That's the feeling you get from the data, a kind of global C-suite pause.
And what does that imply, if you expect flatness?
Well, two things, probably. First, if you want growth, you've got to find it internally through efficiency, optimization, not just riding a market wave. And second, it puts even more focus on managing the risks that could, disrupt that flatness.
Okay, so risks. Are they still primarily worried about inflation and interest rates like they were last year?
Less so, actually. Those concerns seem to have ebbed a bit. They're still there, of course, but not the main source of anxiety anymore. The big one that's really surged, supply chain disruptions.
Ah, okay. Why the big jump in concern about supply chains now? Didn't we sort that out after the pandemic peaks?
Apparently not entirely. Or maybe new issues are cropping up. The numbers are stark. In the 2023 survey, about 20% listed supply chain disruption as a threat to growth.
Right.
In this 2024 survey, that leaped to 49%.
49. Wow, nearly half. That's more than double.
Yeah, a 2.5 times increase. So it suggests that even if headline inflation is cooling, the sort of underlying fragility, maybe geopolitical factors affecting global supply chains, that's still a major headache.
So the CFO is trying to be this long-term strategist while also dealing with the very immediate, very messy operational stress of just getting parts and products where they need to be on budget.
Precisely. It's a constant tension again.
Okay, so if the market's expected to be flat and supply chain risk is way up, the main lever left for driving value seems to be technology, making things more efficient internally.
That's the logical connection, yes. And when you ask about tech, on the surface, everyone's bought in. The survey found 98% of finance functions have invested in digitization and automation. Expectations for AI, Gen AI, almost universal.
98% invested. Okay. But here's where, it feels like there's a disconnect. Because despite that huge investment number, you also found that a plurality, the largest single group of CFOs, say only a quarter or less of their finance processes, are actually digitized or automated right now.
It's a massive gap, isn't it?
Wait, hold on. They're spending the money, 98% have invested, but less than 25% automation for many of them. What's going on? Is the software just sitting on a virtual shelf?
It really points to a classic challenge in big transformations. You can buy the tech, but implementing it, getting it used at scale, that's another story.
So why the gap? What are the roadblocks? Is the tech not good enough? Is the data messy?
Well, the survey asked exactly that, and the key findings is pretty clear. The biggest roadblocks aren't primarily technical, they're organizational.
Organizational, meaning people problems,
Yeah.
process problems.
Exactly that. It's not the servers, it's not usually the data quality, not the infrastructure itself. The top-sided roadblocks are things like already demanding workloads, just too much regular work to do, a lack of relevant capabilities or skills within the existing finance teams, and insufficient resources, not necessarily budget, but people's time to actually implement and manage the changes.
So the tech might work fine, but the team is just too swamped with the day-to-day to actually roll it out and learn how to use it properly.
That's what the data strongly suggests. These organizational, these people-related issues are seen as bigger hurdles than the tech itself.
Let's dig into that demanding workload point, because if you, listening, are trying to implement new tech, this is probably your reality. What does that workload actually look like in finance? It's not just month-end close, right?
Oh, far from it. Think about the sheer volume of things that have to get done on a strict schedule. Complex budget cycles, constant forecasting updates, loads of mandatory regulatory reporting that keeps increasing, internal controls testing. These things are often still very manual, very time-consuming, and they just soak up all that available hours.
So the team is basically running flat out, just keeping the lights on today,
Mm-hmm.
which leaves no time or energy to build the automated processes that would save them time tomorrow. It's a bit of a catch-22.
It is, and that's exactly where the hope for AI, and specifically generative AI, comes in.
Right.
Yeah.
The potential solution to break that cycle, CFOs must have really high hopes for it then.
They absolutely do. The expectations are sky high and quite specific. Over 8 out of 10 CFOs surveyed believe AI and Gen AI will deliver on 2 key things. First, generate insights that actually let people step away from the manual grunt work and do more valuable strategic tasks. And second, just generally boost employee productivity across the board.
So if Gen AI can automate away a chunk of that mandatory workload,
Yes.
it potentially solves their biggest organizational roadblock, the lack of time and capacity.
That's the promise. That's the hope.
Okay, so where are they seeing the most immediate potential for Gen AI? Is it aimed more at helping the back office accounting or helping with the high-level strategy stuff?
It's actually aimed at both, which
Yeah.
kind of reflects that dual pressure we talked about. But the number one area, cited by almost half, 49% of CFOs, is strategy and leadership support.
Ah, so using Gen AI for things like generating deeper insights, maybe monitoring competitors, analyzing market trends.
Exactly. Helping them deliver on that increased strategic mandate we saw earlier.
Makes sense. And the second biggest area.
That was cited by about a third of CFOs. More traditional controlling and general accounting tasks. Think enhancing financial planning models, automating complex reconciliations, improving the accuracy and speed of financial reporting. It's using Gen AI for both strategy and efficiency.
Okay, that split makes perfect sense. Half want help being smarter strategists. The other half desperately need help cleaning up the core accounting work to free up people.
What about those who've actually done it? The early adopters who've implemented Gen AI already, are they seeing these benefits pay off?
Yes, and reassuringly, the results for those early movers align really well with those high expectations. The biggest benefit reported. 71% said they saw improved productivity among their finance employees.
71% improvement. That's huge. That's potentially game-changing for how a finance team operates.
It really is a massive potential ROI if you can get through those initial hurdles.
And beyond just pure productivity.
They also reported other key benefits. 54% cited better use of data in business decisions, so making smarter choices. And 48% specifically mentioned that insight generation was allowing employees to focus on those higher order, more strategic tasks.
So it sounds like the promise is real, at least for those who manage to overcome the organizational inertia and actually get it implemented. It certainly seems that way based on this data. The potential to bridge that workload and capability gap is tangible for the early adopters. So maybe to wrap things up and synthesize, CFOs are really at this fascinating crossroads. They've successfully shifted their mindset and priorities towards long-term strategy, which is a big deal.
Hmm.
But they have to balance that forward look with managing very real, very immediate volatility, especially the surge in supply chain risk, all within what they expect to be a pretty flat economic environment.
Right.
And Gen AI, along with broader digitization, clearly represents the biggest lever they have to boost both effectiveness and efficiency. But, and it's a big but, despite almost everyone investing in the tech, most finance teams are really just starting out on actually realizing the benefits at scale.
They're just at the beginning of that journey. Which brings us back to that core tension and maybe a final thought for you, the listener. The survey makes it really clear. The biggest things holding back digitization and Gen AI success right now aren't the technology problems, the servers, the software, the budget. It's the non-technical organizational stuff. The
Mhm.
overwhelming workload, the skills gaps, just the sheer lack of capacity to manage change. So it makes you ask, when you look at transformation efforts happening in your organization, where's the primary focus? Are you tackling those underlying people and process barriers, that inertia of the day-to-day grind first?
Mhm.
Or is the main effort just about rolling out the next piece of technology?
Mhm.
Because this data suggests pretty strongly that the real value, the real transformation, only unlocks when you first address the team's fundamental ability to absorb and adapt to that change.